the Additional Chief Secretary for Government of Uttar Pradesh, the real brain behind the Global Investment Summit, joins me. Thank you, sir, for joining us on India Today Business Today Group, sir. First question, tell us about the summit, sir. We've been hearing a holistic picture about how many investments, MOUs are happening. Give us a ground picture of the executions that would be happening, sir.
No, it's a hugely successful summit where you see a lot of people have come from not only from the country, but from many of them have come from.
Hello and welcome. You're watching Business Today TV. I'm Sakhi, Batra, and this is Market Today, a show where we'll help you understand all the latest news from the D Street in terms of the stock market movement, the benchmarks, the sectors, and the buzzing action in the stocks as well. Also, how are experts really viewing the current market setup, and where is it that they believe more opportunities are emerging for you as investors to really play up in the markets and garner more profits and higher returns going forward. Let's quickly look at how other benchmark indices, Nifty and Sensex, are moving at this hour. We've already seen the first half of trading session where volatility has been the name of the game, and we've also seen the markets turning absolutely flat at this point in time with the mixed reaction that you can spot. Slight green tick on the Nifty and slight lower take on the Sensex. 61,000, however, still remains on the Sensex. 6110. That's the kind of levels that you're seeing there, just up about 21-23, down in fact about 21-23 odd points. The Nifty is absolutely flat at 17,928. In terms of the broader markets, the mid and the small caps that did not participate in yesterday's trading session while the benchmarks were moving higher, today there is a slight move on the upside when you talk about the mid-cap 100 index. It's up by about 0.2%. The small cap 100 index still lower, about 0.08% or so. The India VIX levels down by 5 odd percent at 12.7, still looks better at this point in time. The market breadth, however, is divided between the gainers and the losers, with Nifty 50 stocks seeing 24 advances to 26 declines at this. Doing well in today's market is perhaps the auto names that are up about 0.4% odd. Slight gains coming in on the IT pack, metals pack, and the realty pack is seeing some bounce from continuous losses that we've been spotting on this index. In terms of the gainers and the losers, the top 5 gainers on the Nifty index include names such as Eicher Motors, that's topping the charts ahead of the Q3 numbers, 4.5% uptick for that one. Apollo Hospitals reacting to its numbers, 3.9% uptick. Adani Enterprises up for the second day in a row, 2.5% uptick for this one. Reliance Industries continues to move higher, 2% up after that 1.5% move came in yesterday. It's trading at 24.24 now. Tech Mahindra up at 2% again to 1,033, the current levels. On the downside, however, you do have these FMCG names that were moving higher yesterday. HUL Britannia down in trade, Sun Pharma down by 1%, HDFC ONGC also down in trade as well. Time now to welcome our guest for the day. Siddhartha Khemka joins in. He's the head of retail research at Motilal Oswal Financial Services. Welcome, Siddhartha, and thank you so much for taking the time out for this discussion. First up, your view on the overall markets. We have seen a complete sideways lackluster move in the last 1 or 2 months odd. Despite all the big triggers that we've seen, the budget, the RBI, nothing has really moved the market so much or made the markets enthusiastic at all. What will it really take for the markets to really break out of this range?
Yeah, thank you, Sakshi. So if you look at the market cues, they have been pretty mixed, both if you look at from the global perspective as well as from the domestic perspective. On the global front, the Fed rate hike and the economic slowdown continues to have a major mind share. While on the domestic front, we have seen the corporate earnings now coming to an end for the December quarter. Results have been more or less in line, but if you look at the overall trajectory in terms of growth, the growth has slowed down for the corporate earnings from what we had seen in the last couple of quarters. And that is something which is kind of giving a pause in the overall positive momentum for the domestic markets. Apart from that, macro cues continues to remain supportive. The CPI inflation, yes, marginally ahead, higher, but WPI came in at much lower. So the outlook remains mixed in terms of what the US Fed could do. So there is a general consensus expectation of one more rate hike by the US Fed, while the window for a rate hike by the RBI on the domestic side is what is remained open. So that would be based on the data. The CPI has become a little higher. So there could be a chance of another 25 basis rate point hike, which could keep the market movement on the upside in a check. So overall, our view is that for the near term, we see the market consolidating in the current range with a positive bias. FIIs have thankfully turned positive in the last couple of days. That is a good sign. And as I said, overall macro as well as micro looks stable as of now.
Okay. In terms of the sectors that are giving you more confidence to perhaps nibble into more and put money more at this point in time, which sectors and themes are you really looking bullish on?
So, Sakshi, if you look at the corporate earnings, clearly two sectors came out as clear winners.
Okay.
Banking and financials were the one which held the baton of showing strong growth, followed by auto sector, which is recovering from the supply chain issues, high commodity costs. They are all becoming positive. So supply chain issues are getting resolved. Commodity prices have softened. They have passed on the price hikes. Plus, there is some improvement in the overall volume growth. So I think for these two sectors, banking, financials, and auto are clearly leading the way in terms of earnings delivery. And then if you look at from a perspective of investment opportunity, IT is a space where the things are turning positive. The results were better than expectations, especially for some of the larger ones. Plus, I think now with the valuations coming in the comfort zone, the stocks having corrected both time-wise as well as price-wise, I think from a long-term investment perspective, things are turning positive for the IT space.
Okay, okay, understood that as well. Apart from this, a whole host of new themes are, the themes that are in news flows these days. I'm going to be talking about those as well. First is the new age tech stocks that I wanted to discuss with you. I mean, after a few of them have reported some positive indications in their earnings, again, the analyst community have been looking at a fresh view or taking a fresh view at some of these stocks as well, especially, Paytm that has delivered, operational profits ahead of its own estimates as well. The tonality of the managements have also quite changed, from earlier when they used to mention that perhaps they do not look at profitability as a metric for their own growth as well. Now their shift, you can actually see a shift in their own statements. They're talking about, getting into the profitable zone sooner. Has that really given you more confidence over time to now take a fresh look at the new age tech stocks? And which of these tech stocks are you bullish on now?
So, Sakshi, first upfront a disclaimer that we don't have an active coverage on some of these names, so we don't cover them fundamentally. But if you look at the results, definitely Paytm has come out with strong earnings and strong commentary. So the market is kind of re-looking at some of these names. Nykaa, the results was pretty much okay, in line. However, Zomato, I think another quarter of weak numbers. So the market will definitely look at each its own. Paytm definitely looks worth if they are able to continue with this, so sustain this outperformance in terms of profitability, in terms of the growth, the way management has been sounding. The problem is that the management have been sounding pretty confident right from the day of IPO, but they were not able to deliver that in terms of numbers. Finally, we are seeing that delivery started happening, but to be very positive, I would want to see this kind of performance at least for 2-3 quarters
Okay.
before I can say that things would really turn positive for some of these names.
Okay, understood that. Let's also focus on some of the buzzing news in trade today, especially some of the stocks that are moving higher. Eicher Motors, I'll talk about that. You did talk about that you've turned a little, more positive on auto space as well after the earnings. Eicher Motors has rallied 5% on better than expected Q3 earnings right there. Your thoughts on the way things have changed for Eicher Motors? I do remember about a year or so back, there were some issues, but, gradually some of of those issues have come on the back burner. Again, things are on the positive territory, and 3316 again right now for Eicher Motors. Is this a stock that still has more steam left and one can look at this stock afresh after the earnings?
So, Sakshi, the earnings were definitely better than expectations. The company is getting the benefit of softening raw material costs as well as the price hikes that have they started taking. So the full impact will be seen in Q4, where the entire benefit of raw material cost and price hikes will get reflected in the earnings. The company has definitely launched a lot of new models, which is benefiting from the, which is helping them support the overall volume growth. So that is also helping. And if you look at overall the sector as a whole, as I was telling you, is kind of recovering from the supply chain issues in terms of this the chip supply, the raw material costs, and pricing. So overall, I think definitely worth a look. But if you look at the auto space, I think two segments where the EV penetration is being seen pretty fast. One is the two-wheeler space, and the other is the series, the bus and the truck segment, where we are seeing strong penetration happening in the EV space, and that is
Yeah.
where I think the opportunity lies.
Okay. Absolutely. You know, one or two stocks we'll talk about post the Q3 earnings as well. One is Torrent Power as well. That also showed a sharp, increase after the Q3 results. It's also announced a special dividend as well. How are you looking at Torrent Power as a stock? And after this movement, what would you really suggest to investors, those who already have this stock in their portfolio and those who may be looking at it as a fresh opportunity post the earnings?
Yeah. So again, unfortunately, we don't have an active coverage on Torrent
Okay.
Power. Results were
Okay.
definitely good, but beyond that, very difficult to suggest.
Okay. Are you tracking any of the defense names? I mean, Aero India show is on, so defense stocks. I remember about 2 months ago or so, this theme was picking up pace, and analysts had begun talking about it. Some of them were betting big on some of the large cap majors from the defense pack. Your thoughts on this theme?
Yeah, so I think actually that's a very good theme to play if you someone wants to play the domestic growth and the way the defense sector has really opened up from largely few PSUs concentrated sector. Now we are seeing a lot of private sector participating. We are seeing large orders coming from the government, and even execution is happening. So I think
Yeah.
it's a good long term theme that one can play. There are several players in that space. There are PSUs which are pure play defense players, but then there are a lot of other large cap private players where defense is an emerging theme, be it a Larsen, be it a Bharat Forge on the private space, and on the if you look at Bharat Electricals, HAL, which is on the public sector space. But we are overall very positive on the defense space, and we have coverage on some of these private players like Larsen or Bharat Forge, even for that matter, Ashok Leyland, Tata Motors, which
Yeah.
have a small portion coming in from the defense space.
Right, right, absolutely. Apart from this, Siddharth, do you have any one or two stock picks that you can share with all our viewers today where you believe considerable returns can be really made if one enters at this point?
Yeah, Sakshi. So, continuing with my theme in the auto space, where I was saying that EV penetration that we are seeing is happening at a rapid pace, especially in
Yeah.
the two-wheelers and the CV space. That is the preferred segment that we are looking at. Ashok Leyland is a pure play CV player in India. So it reported a very strong numbers driven by better mix, price hikes, and also benefiting from lower commodity costs. If you look at the EV pipeline, that is pretty strong for Ashok Leyland. They have already got orders for 2,600 buses. There is also a possibility of a fundraise in the EV subsidiary, which could be a positive valuation trigger. We are seeing expect Ashok Leyland to show strong growth on back of recovery in the macro, pickup in the construction as well as infra activities, which is a key theme that we saw in the budget. Uh, Ashok Leyland is best bet play on the CV cycle recovery as well as the EV penetration. So that is one stock we like from the auto space. The other is a agrochemical theme that we like. Again, another sector which was reeling under pressure because of the high commodity cost. That is kind of softening and providing impetus to margins. So PI Industries is the second stock that we like. It reported healthy quarterly numbers. Revenue grew 19%. PAT grew almost 60% with a margin expansion of 380 basis points. So we believe that exports is a key theme for PI Industries. Volume growth of 9%, overall exports revenue grew 23%. Its custom synthesis business is seeing strong traction with the order book seeing a strong uptick to $1.8 billion. That is a strong order book that we see. The management is confident of delivering 20% plus revenue growth with sustained margins at higher levels and improving return ratios. We see good upside in PI Industries and have a target 1 year target price of 4,500.
Oh, okay. So 4,500. So considerable upside on PI Industries and a strong show that even Ashok Leyland can give on the EV play going forward from here. Two bets coming in from the auto pack and the agro space as well from Siddhartha Khemka. Well, thank you so much, Siddharth, for being with us on the show and discussing these various sectors and themes and specific stock ideas for all our viewers as well. Let's quickly take a look at how the markets are trading before we wind down the show. 12 points down for the Sensex, 61,019 at the current level. The Nifty is up by 3 odd points, absolutely flat with slight volatility that you can really spot. We'll have to see whether anything changes in the second half, if there is any pullback or a considerable support to the markets that comes from any particular sector. We'll keep an eye out on that, and for that you should also stick with us on Business Today TV. Don't go anywhere. Don't forget to subscribe to this channel and also stick with us via our other social media platforms, that's Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in for now.
All right, joining me today is the DMD from SBI. Thank you so much for joining us, sir. Tell us about this